After President Trump continued his tough stance for fair trade at the G7 last weekend, could a trade war be in the offing? And what would that mean for American consumers, jobs, and business? Bob Nardelli is the perfect man to help us unpack all of this and a lot more. He's the former Chrysler and Home Depot CEO and a longtime GE executive as well. And Bob, it's always a pleasure to see you.
It's great to be here. Thanks for the opportunity.
Thanks so much for joining us. So here we are in pretty much almost exactly the middle of the year. In 2 weeks, we'll see the end of the first half of the year. How would you characterize business so far?
Well, business, I think the Fortune 500 CEOs have done a phenomenal job. And they give a lot of credit to this administration. You know, if you think about it, 50% of them believe that the next 12 months will be better than the last 12 months. Over 70% of them are going to be hiring people. They believe that the new tax code is going to help significantly. The Trump administration policies are going to help significantly. So I think overall, through the first half, earnings per share are up. About 24, 25%. So it bodes well for corporate America. And then if you think on the M&A front, you know, we'll see almost $1 trillion of M&A activity. It's up 80% year over year. And we've got probably 15 to 20 deals over $10 billion. So big deals, a lot of deals. And so I think, you know, from a corporate America standpoint, things are moving along extremely well.
They really are. I mean, you're talking about that 20+% earnings growth in the first quarter. We're expecting another 20% earnings growth for the next quarter. We have unemployment at levels not seen in a long time. African-American unemployment lowest ever at this point. And so that's good as far as where we are right now. The question is what happens next. And now I want to talk to you about the policies coming out of the White House, because I know that the tax policy was a huge boost for business and for the economy. What about the policy on trade? You were an auto executive for a long time. When you look at these tariffs on aluminum and steel, what is your expectation of the impact?
Well, you know, I think, you know, I'll steal the president's, you know, about fair trade. And I think when you look at steel, for example, 125% and aluminum at 110, you know, the consumer may have to pay a little bit more for that. The corporations may have to pay a little bit more in aggregate. But the steel operations, you know, obviously that's going to bode well to bring back manufacturing. You know, if you think about those industries, if you think about national security, our ability to produce steel should the situation, you know, call for that. So I think there's some very good aspects of that. I think, you know, there's mixed reaction among CEOs. Some of the large retailers obviously are very concerned about tariffs, you know, coming on imports coming in. That's the basis of a lot of what they're doing today. You know, when I was running corporations, I never had an outsourcing strategy, Maria. I always thought about what do I have to do to be globally competitive. You know, we were competing in over 100 companies running GE Power Systems.
Right,
so
100 countries.
100 countries.
Yeah.
So again, I had to compete, you know, globally, whether it was on taxes, whether it was on tariffs, whether it was on labor rates, whether it was on our bill of materials. So I think what he's trying to do is level the playing field. It may not be perfect, but I think he's making some good moves.
And sources close to the president have told me that this is all still a negotiation. So while we do have this list that the White House, you know, came out with this week in terms of the specific things that will be tariffed in China, and while he has announced this 25% on aluminum and 10% on steel, he's still negotiating. We may very well see it change over the near term. What has been more troubling to me is the issue around China. I wrote an op-ed about it this week in Real Clear Politics. I hope you'll check it out. And I titled the op-ed, China's Deal Breaker, Property Rights, because basically China has been stealing our intellectual property for decades. And it doesn't really matter if they buy more agricultural products or energy. That doesn't solve the biggest issue of them all, which is the fact that China is stealing our technology.
Yeah,
how do you stop that? They won't even admit that they're doing it.
No, and you mentioned earlier when we were speaking about when you go to China or you go to Russia, you don't bring your own phones, you don't bring your own computers for fear that there would be invasion and privacy.
Right, as soon as you get into their airspace, they have access to everything, and they use it.
Yeah, and you know, I think China probably is looking at world dominance through economics, not through war or power. You know, they have a philosophy here in the U.S. When I had like over 40 portfolio companies with a private equity group, they would buy in, buy up, and then buy out. So they recognize they may not have the management talent or the expertise, so they buy a piece, they buy up, and then they eventually buy out to be able to plant a flag here in the U.S. And if you look at some of the recent dispositions, and there are a lot of dispositions coming out, a lot of carve-outs. If you look at GE, for example, sold their appliance business to China. There's rumors that they're selling their lighting business to China. So, again, whether that results in some IP transfer, surely it will.
Right.
And then they'll come back and be pretty competitive.
Because what I wrote in the op-ed was the best you can do in terms of China as an American company is get 49% of a joint venture.
Yes.
Once you get that 49% of a joint venture, the Chinese government says to you, okay, give us your technology. Show us how you do it.
Yes.
Where's the innovation? And then you just transfer your technology there, and in just a few years, you'll have a competitor right there in China that knows exactly how to do what you've been doing. So that's an issue. I don't know if the president's going to be able to make a mark here, but in my view, that's really where we need to put our energies.
Yeah, and he's tried that, and he's made some attempts, and then they backed off a little bit, and they'll make some more attempts. So I think this is going to be a long process to try and quail some of the issues that have gone on over there on IP and stealing of IP.
You invest in so many different businesses, and I know that you saw healthcare and wellness early on.
Yes.
In terms of investing there. You saw technology early on. Where do you see growth in the economy right now? Well,
that's a great point. When I was running Home Depot, we always looked at mega trends.
Right, that's right.
Post 9/11 was safety and security. The home became a sanctuary, so we wanted to respond, market-focused, customer-centric on that, aging in place, safety and security. I think today you nailed it. I think if you look at the healthcare system, that's just exploding with investments, consolidations, improving not only delivery, but the cost aspect of that. That's a big one. We talked earlier, relative to what's happening with content. Content is becoming king for a lot of these mega deals that we just saw approved, the AT&T deal with Time Warner. So I think that's going to be a big opportunity. And, of course, all of the technologies, artificial intelligence, augmented reality, virtual reality, all of those things are going to be tremendously great opportunities for investment.
So this is where you see the growth. It's interesting that there are more job opportunities than there are actually people to fill some of those opportunities.